Today's auction results are finally out. The 20-year bond and the 10-year bond. The results are within what we were expecting, so nothing shocking. It's just that the lessons are sequentially dire, especially depending on what might be your investment goal. If your investment goal is return on investment maximization, investing for the most amount of money to make, or to some extent cash flow laddering to be paid in different months, or what's the maximum tenor of treasury bond you want to buy. These three sequential questions, which I'm going to try to answer, are extremely important on what decisions you're going to have to make going forward as you purchase treasury bonds. But before I go into that, I want to take 1 minute to address the people at Bank of Uganda. And when in Feb 2022, I first made the first post about treasury bonds, at the time the retail investments for that auction in Feb were less than 2 billion. Today, in August, the retail investments are now averaging over 15 billion on the primary market. In the secondary market, every single day, over 30 billion is bought by retail investors. In February 2022, the retail investors held less than 1% of the total treasury bonds. Now we are holding close to 7%, and it's growing. It has been the voices of so many of us, of which I proudly count myself in, for the last 4+ years, that have been at the forefront of creating awareness about treasury bonds for the retail investors. This platform alone, the Substack, has been read by over 2.3 million Ugandans, and the conversations have been so much about treasury bonds. The primary source of information, whether you like it or not, for many retail investors, even some people at Bank of Uganda, has been Kakande's analysis. It's not just about information. It's not just about telling them which bond is being auctioned off. It's about going deeper analysis. So if some of you do not see the forward-looking nature of the private market, of the private sector playing its role in creating awareness in the capital markets, it saddens our part. For so long, I've knocked on your door to ask for some help to access more information easily that would help us to inform investors better. For so long, I've knocked on that door, and somehow, somewhere, those doors started to be opened up, where I have to access that information that will disseminate faster, because we have so much information asymmetry in this market that the faster the retail investors access information, the better. And my platforms, whether it's the TikTok account, whether it's the Substack, whether it's the YouTube channel, whether it's the Twitter, all of them combined in 1 year create a more than 20 million communication views, have been very fundamental. And not for me alone, but for so many investors that I've interacted with. So to start shutting those doors down in an emphasis to protect just the institutional investors and not to be forward-looking and allow us to always guide us to a website that is almost hard to navigate, yet you somehow, somewhere give a head start to the retail, to the institutional investors, is taking us back. This is my kind request to whoever is making these calls to reconsider. I will address this in due course. Coming back to the auction for today. This has been the last auction for the 20-year bond. It's the last time Bank of Uganda is selling the 20-year bond. At least it might come back in the future as potentially a 15-year bond, or maybe a 10-year bond, but as a 20-year bond, this is the last auction. because starting September, they are introducing a new 20-year bond. So it has closed at a good note, not the highest note. It had the 20-year bond in the last 2025, when interest rates were extremely high, it could bring in 17.95%. For so many retail investors who invested at the time, anything below 17.5 or 17% was not considered a good investment. So it coming back to 16% and now coming back at 15.65% is a clear signal of what might have to come in September. Because like I say, the new bond is coming. And the time the first 20-year bond will be sold off on September 10th, that yield will become the coupon rate. We shall talk about that in a different manner. But the 20-year bond has ended up cutting off another 30 basis points from its last auction, which was in July 15th, where it came in at 15.95%. And this was expected, especially after the July 30th auction, where the 25-year bond came in at a cutoff yield of 16%. So we knew there is no way the 20-year bond is going to go back on those elevated interest rates. The interest rates are easing down. So for the 20-year bond, for the people who bought the 20-year bond, managed to get in at least a 2.4% discount. Not as high as what many people would want or people what have been getting, especially in the last 2 years, but it's still at least a discount. So for the people who have always gone into these treasury bonds with the sole purpose of maximizing interest rates, the return on investment, the 20-year bond was the clear indicator. Of course, it has a 15% coupon rate, which many times when people compare it with the 10-year bond, which has a 16% coupon rate, many people think the coupon rate is the ultimate equalizer, so they go for the 10-year bond. However, the 10-year bond came in at a cutoff yield of 15%. A 65 basis point difference that is mattering so much more, especially when you look at that the people who are buying the 10-year bond, they ended up paying an 8.5% premium. Yes, an 8.5% premium. Of course, if your strategy was not profit maximization long term, if your strategy is profit maximization, the 20-year bond should always be your solution. Even as we go into September, but we shall talk about that. But if your strategy was that you already have a 20-year bond, you need a bond that pays in different months, especially knowing that the 20-year bond has been auctioned off so many times, and it pays in January and July for the next 8-9 years before it changes to December and June, then the 10-year bond is a very good bond, especially if you want to be paid in different months, which the 10-year bond pays in May and in November. However, if also your strategy is that when you look at the assessment of the interest rates and the premiums and you want to lock in a very good higher coupon rate bond, then the 10-year bond is much better. The benefits of buying bonds that have a higher coupon rate, in long term, when the time comes when you want to sell it, you get and attract a very good price. Oh yes. So when you buy a 10-year bond at 15% coupon rate, yield cutoff yield with a 16% coupon rate, in 5 years down the road, you want to sell it and someone is giving you, at that point, it will have maybe 6 years to go. And someone is giving you maybe a cutoff yield or a yield to maturity of 13%, you'll get much more money than if you end up buying a bond that has a lower coupon rate. Because the coupon rate and the yield to maturity or the cutoff yield, they mix very well in a way, a technical way that ends up determining what you pay or what you get paid at the time when you are selling. But also, sometimes many people don't want to invest for 10, 15, 20 years. They want to invest for short to medium term. And the 10-year bond is the better one, no matter even when they are paying the 8-year bonds, the 8.5% premium. So you do not despair just because you paid an 8.5% premium. It's still a very good investment. But what is extremely very important is to know Treasury bonds still make money. Now, this sends a signal on what we should expect on August 29th, when Bank of Uganda will be selling off the 15-year bond and the 5-year bond. That is going to be the last time Bank of Uganda is selling off the 15-year bond in its current form as a 15-year bond. The 20-year bond, the 2043, and the 15-year bond, the 2039, have been fundamental for the last 2 years. And they have sacrificed themselves so well to enable us, finally, for the first time, so many people are about to buy bonds that pay in September and March. Because on September 10th and on September 23rd, Bank of Uganda will introduce a new 20-year bond and 15-year bond on September 23rd, respectively. And those bonds will be paying in March and September. But the lessons you have to pick up from here is we are in a period where interest rates are easing. They are coming down. The Bank of Uganda and the team at Ministry of Finance are doing an incredible job. When you look at the 20-year bond, they offered 430 billion, they received the tenders of 861 billion, and they accepted only 400 billion, which means they rejected over 400 billion in the 20-year bond. On the 10-year bond, they tendered 330 billion, they received 949 billion, they accepted 430 billion. It means they rejected over 500 billion. In this auction alone, they rejected over 900 billion. And part of that signal is to say, we want to borrow. We want to still borrow from the primary, using the domestic market, but we shall not take expensive debt. That sends a signal that when the September 10th and September 23rd bonds come, do not be surprised when the cut-off yield, which will end up becoming the coupon rate, is within the 14 to 15% rates. Actually, right now, my prediction is 14.5 to 15.5. The first time they will auction off those bonds. You do remember very clearly when Bank of Uganda auctioned off the current 25-year bond, one of our favorite bonds, on August 5th. At the time, interest rates in the market were as high as 17.95%. The day they auctioned off, the first auctioned off that 25-year bond, they auctioned off the 15-year bond. The 15-year bond brought in a 17.65% cut-off yield. And people who bought a 15-year bond ended up getting close to 9% discount. Yet the bond that was going almost 11 years difference with a higher term risk came in at a 16% cut-off yield, which ended up becoming its coupon rate. Of course, when you look back, that is, if for anyone who has a 25-year bond right now, that was a good investment, retrospectively. So do not be surprised. When you look at the period they are about to introduce these bonds, is a period where they are trying to push interest rates down. Do not be surprised when those interest rates come, when the cut-off yield for those new bonds is lower. Going forward, the majority of the bonds are going to be at the premium. For example, the 5-year bond and the 15-year bond, they are going to auction off on August 29th. They are going to be at a premium. Of course, the 5-year bond will have a higher premium than the 15-year bond because the 15-year bond will have a higher cut-off yield than the 5-year bond, but they will be at a premium. But that starts to prepare us for September because there are so many people who are waiting for September, who are waiting to make these decisions. And it's extremely important to look at these results in that lens. Happy investing, everyone.